The only way that we're going to be able to satisfy the needs of the battery going forward are recycling. When you have a look at Europe, it will be the second largest lithium battery production hub in the world outside of China. It'll take over from Asia. We're producing very pure products at very, very high recovery rates. In fact, in excess of what we assumed in the scoping study. So we've got every confidence that it will remain a highly robust project.
Hello and welcome to Crux Investor. We spoke earlier today to Chris Reed. He's the CEO of Neometals, the ASX listed company. Having made their money originally as a miner on the Mount Marion lithium project, they're now moving further downstream to become a project developer, looking at the battery recycling space. They have recently signed an MOU with the German conglomerate SMS, and they talk us through how they're going to monetize that. Plus they've got a nickel project, which looks quite interesting, and the Barrambie and lithium peroxide projects as well, slightly further downstream. Take a look in the description below to get a bit more detail. If you want to look at anything specifically, click on the timestamp, that'll take you to that part of the video. And if I could ask that you click the button in the corner of the screen to subscribe to our YouTube channel. And of course, if you want to see more videos like this, please click the notification bell. So let's hear what Chris had to say. Good morning, Chris. How are you, sir?
Very well, mate. Yourself?
Not too bad, not too bad. I'm just looking in the background and slightly jealous of the sunshine that you've got there, but I'll be okay. Don't worry. Just want to maybe start off with give us that 1 minute summary for people new to this, and then I want to get into a few of the projects, if I may.
Sure. Neometals is an Australian listed project developer. We've got like a direct focus on the EV and ESS thematic. That is the common thread amongst our diversified portfolio of projects. You know, what wraps it all together is this exposure to the mega trend that is EV and energy storage.
Right. Okay. Beautiful. Thanks for that. Well, why don't we kick off? Like you say, you've got a portfolio of projects which are kind of have EV thematics running through them, and we spoke with obviously you recently, and also Jeremy when he was in London, and being very careful at explaining the fact that you're a project development company. So let's talk about a couple of the projects. So let's start with battery recycling first, because that's the priority as I understand it. Do you want to give us an update on where you're at?
Yeah, sure. So in 2019, we embarked on a pilot plant to prove out our battery recycling process. So this is essentially taking production scrap and end-of-life lithium-ion battery products, be they from consumer electronics or cars, processing those and then extracting out the valuable materials. So recycling more than 90% of the actual feed material, recovering the cathode materials, so cobalt sulfate, nickel sulfate, so that we can close the loop and put those back into the battery supply chain. So for 2019, we started in February up in Lakefield, Canada. We've now materially completed that. Lithium is the last element that needs to be taken out of the solution. Mm-hmm. That will happen in January, and we'll close that. What we've done in the interim is we've entered into an MOU with the world's largest constructor of processing plants, a company called SMS Group in Germany. They're more than 140 years old, 14,500 employees in 95 sites around the world. So we've got a 50-50 joint venture there. They will build them for a fixed price, operate them, procure finance, and we'll have a 50-50 joint venture. Initially, the most likely location for a commercial plant will be in Germany.
Right. Okay. Do you mind if I dig into the weeds there? Because MOU's an MOU, right? This group with SMS, SMS Group in Germany, they're a $5 billion company. I get it, they're huge, but right now they've taken an option on working with you.
Sure.
You've got to prove to them that you can extract the cobalt, the nickel, the lithium, the copper from these batteries in an economic way, right? So can we just talk about where you're at with that? Because you've in November announced the cobalt results, but what about the rest?
Sure. We started on battery recycling in 2016, and then we've gone through and we've trialed a number of flow sheets We acquired a flow sheet, which we've taken through a scoping study, the pilot, and now we will move to do a Class 3 engineering cost study. The earlier scoping study on this flow sheet indicated that it was a very robust process. So the pilot, you just want to get much more accurate test work. You're obviously larger scale, continuous. It's almost been going for a year. So the engineering data we have is very, very accurate. We put out that we were recovering better than 98% cobalt into a 99.9% pure solution. We've recovered more than 98% of the nickel to a 99.9% pure nickel sulfate solution. So, we're producing very high quality purity, or very pure products at very, very high recovery rates. In fact, in excess of what we assumed in the scoping study. So, as we've increased that level of accuracy, the volume of data, we've got every confidence that it will remain a highly robust project. And as you'd expect, we developed the world's second largest hard rock lithium mine with two multi-billion-dollar companies, and we started off with an MOU. We wouldn't be entering into an MOU if we didn't think we could complete it. You'd hardly, create a rod for your own back. But you would expect them to be very diligent, and they have been very diligent over the last 6 months, and that will continue. And then, we're negotiating the terms of a 50-50 joint venture. Quite confident that we'll tick the technical feasibility box, the economic viability box. It's really down now to negotiating the final terms and moving ahead. So, we've told the market that we should be able to execute that by the end of February. We'll then set up for our commercial vehicle with SMS. Both boards have committed the funding, subject to signing the JV, to build a demonstration plant. We will then process third-party feeds for cell makers, car makers, what have you. Once they are happy, all that is needed in the background there is the commercial feed agreement. There's no risk in terms of marketing the product at those quality levels. The real commercial hinge is you have to run a demonstration for these big companies, car makers and cell makers. They are multi-billion-dollar companies. We've got what we believe is a fantastic process, and now we've got a fantastic household name in Germany to operate. So, the reputational risk, we've sorted that too. I mean, we think we're good project developers, but we in Australia, if you're in Europe and you're targeting Germany, certainly the demonstration plant the front end of the plant will be in Germany, and the back end of the plant will be in Vienna, where SMS have two operational bases. That'll help us prove out the hub and spoke approach. But ultimately, the German car makers and cell makers, they want to pick up a phone and speak German to a German.
Yeah. Okay. I want to come back to the hub and spoke component here, because I want to understand the scale. Yeah. But first, given that most companies we talk about what they're going to get out of the ground for the EV thematic, we're going to dig out cobalt, we're going to dig out nickel, lithium, etc. You're slightly different again, where you're saying, well, look, once those batteries are spent, right now they would either go to some kind of land, they would be stockpiled and dealt with through pyrometallurgical process, which doesn't really have good recovery rates. You've got a hydrometallurgical process, which has better
I think, look,
right?
I mean, have you ever put a lithium battery in for recycling yourself?
Yes, I have.
I haven't.
All right.
Well, that's good that you have it.
I don't know what happens to it.
I suspect quite a lot of them go to landfills. Some would go to stewardship programs.
Well, here's an interesting thing for you, actually, Chris.
So you don't want to throw them in.
Right. Okay.
Pyrometallurgy, you get poor mass recoveries. You'll get less than 50% mass recovery because you're burning stuff. So all the graphite, the plastics, the lithium electrolyte all goes up a stack. They scrub it out, presumably. But it's not really sustainable or closing your loop. You're sort of only half closing the loop. So our process is targeting to recover 90% of it. And I think when you have a look at Europe as a continent and as our prime focus, it will be the second largest lithium battery production hub in the world outside of China. It'll take over from Asia in the next sort of 5-6 years, at which point Europe will be producing about 350 gigawatt hours of batteries. Now, that's if they don't announce any new ones. So 350 gigawatt hours is the equivalent of about 35 billion AA cell batteries, if the AA cell batteries were lithium, right, rather than whatever they are now. So 35 billion batteries would add up to about 1.5 million tons of fresh batteries hitting the market every year. Now, statistically, about 10% are scrap in terms of off-spec cathode failed, what we call jelly rolls. So they anode and cathode wrapped up, but it doesn't go into a cell yet. Failed cells, failed packs. So in 5 or 6 years' time, you're going to be generating 150,000 tons of scrap a year and sending the balance out to the market. But in 5 or 6 years' time, we're going to have to handle the end of life that's produced today. So, we sized a plant to take this 10,000 tons, this 10% statistical failure rate. And so we've got a 50 ton a day plant, almost 20,000 tons per annum. And it's designed that you'll have to scale that up in a couple of years to process 200,000 tons. So we're looking at capturing a small market. We've got ambitions to capture a large market in Europe. The 1.5 million tons of batteries that are going to be produced per annum in Europe are going to need about 66,000 tons of cobalt, which at the moment would be more than half the world's cobalt. Now, only half the world's cobalt goes into batteries. The other half goes into alloys because it's a non-magnetic mineral. So if you want your turbine blades on your plane to not magnetize, you need to have cobalt in them. So it's non-substitutable. So, there's stress on the cobalt supply chain. It'd be 180, it'd be 10 to 20% of the world's nickel if it was metal, but it's nickel sulfate. So that would be in excess of what the world's production capacity for nickel sulfate would be today. And it'd need about 350,000 tons of lithium hydroxide, which is what the world lithium market is today. So the only way that we're going to be able to satisfy the needs of the battery going forward are recycling. We are absolutely going to have to get this for a security of supply. So one, we're trying to keep the batteries out the landfill. Two, we're trying to capture as much that's already in Europe, and you don't have to mine fresh material. So with our process, we know that our process is probably about 20% of the carbon footprint of pyrometallurgy, which is the current sort of process that's used today. Now, if you look at what the greenhouse footprint would be, or the CO2 footprint would be for recycling the fresh material, you have to cast your mind back. Like, we're recovering high purity materials from a battery. Normally, to get that material, you would have to have perhaps a lithium mine in Australia and crush, 8 or 9 tons of rock to make 1 ton of concentrate, ship the concentrate to China, and probably 7 to 8 tons of concentrate per ton of lithium hydroxide. So you're mining 60 or 70 tons of ore to make 1 ton of lithium hydroxide, and you're generating 250 tons of waste that you have to stockpile. So you get that up to China, then it's got to go from China, it's got to get made into a cathode, then it's got made into a cell, then it goes to a car maker. So the CO2 footprints are huge. So from a security of supply and environmental responsibility, cobalt, we know that, somewhere there's some element, whether it's, 5, 10, 15% of the cobalt that comes out of Africa is likely to be artisanal and potentially, non-child friendly. So there's, for a whole massive amount of reasons, from economic, sustainability, social, environmental, we're going to have to get our head about this recycling and then trying to not develop all this stuff out of virgin mines.
No, I think that's very topical, actually. And you painted a fantastic picture there. It's very topical at the moment, because I think if I look back to the mining conference in Melbourne, and even recently in London last month, you had a lot of protesters, and it's absolutely their right to protest, no problem with that, about some of the behaviour from some of the mining companies. They are concerned, but what you're doing, I guess, would possibly address some of their concerns, and the fact this recycling is a good thing to do for all the reasons you lay out. So yeah, very, very, very topical. But look, you painted a picture of the scale of this globally. For your investors.
Well, no, that was just in Europe.
Well, sorry. Okay,
that's just in Europe. Like, I mean,
that's just Europe. But the process is the same the world over. But can
correct.
you help me understand and your shareholders and any potential shareholders, what's the opportunity of the scale here for you? SGS is a $5 billion group, operates in 95 countries around the world. Great partner in terms of being able to help you put this thing together, your plan together.
Yeah.
Financial contribution, but more importantly is the feedstock and distribution of this. Can you give us an idea of what you think you're building?
If we go back to May, when we put out the Class 5 study results, and this is for the starter plant. So once you attach to a cell maker or a car maker, it's got a modest sort of capital cost around $66 million US. We'd be 50-50 with the Germans, and the Germans have got to bring 50-50 debt. So, our capital exposure somewhere around $20 million US in terms of investing in the starter plant. The payback of the capital costs, less than 2 years, so that ticks a box. We had pre-tax cash flow over a 10-year life of plant. It'd obviously be much more, and using conservative assumptions, that was 50 million US for your net cash flow for the project. So your 66 million capex and then 50 annual cash flow with conservative assumptions, and we're actually beating those recoveries now.
Right.
It is a robust, and you're not having to take the risk of a mine, geological risk, how good the miners are, how much they dilute it, how does this stuff process in the plant. Everything that goes wrong with mining is gone. You actually know what's in the batteries. They were high purity battery grade cathodes when they went in the batteries.
Right.
So you're trying to recover a very highly pure product. So in terms of the economics, I mean, we came out with a pre-tax 12% NPV of 220 million. So if you had to scale, if you have to make the plant 10 times bigger, that obviously goes up proportionally, and then the plant will last longer than 10 years. I mean, we'll be processing lithium batteries in 10 years that we're producing now. So I think, obviously you've got to caution. I'm going to put a cautionary statement with scoping studies. We wouldn't be making an investment decision based off that. We have completed a pilot at, a significant cost. Mm-hmm. The guys at SMS, not only will we run a demonstration plant, but they will run a Class 3 engineering cost study. And reminder that these are the engineers that actually have to build it. For a fixed price EPC, they've got to operate it over the long term. So, we expect it'll be engineered like a German process plant. I mean, that's what we want.
Absolutely. Okay, but that's the economics. I'm interested in the scale, because if I'm going to invest in your company, I want to know where it's going.
SMS are investing so that we can build multiple plants. They're in the business of building multiple plants. They've built more than 2,000 processing plants since the year 2000.
And your current MOU leads you to believe that the relationship will continue beyond plant number one. They're not buying the license from you. It's a JV.
Absolutely.
Right. Okay.
Correct. I mean, we're talking to, we've been shredding batteries for car makers, consumer electronics, cell makers, and so we look to deploy a number of these. So the hub and spoke is that you can have the front part of the plant, which involves shredding to make the batteries safe to move around. You take them from actually having some charge to being just a shredded black mess. or a black mass is the technical term for it. Then we can put that in 44-gallon drums. It's a dried product. It's completely inert. We can send that to a central processing facility. So, we absolutely the target with SMS. If SMS were only thinking about one small plant, I doubt they'd be there.
Okay. But when do you get to a point where you sort of understand? You've laid out some big numbers for Europe in terms of gigawatt hours, etc., and there's some numbers in the marketplace. But have you got some sense of what it is that you're going to create in terms of coming back to the scale question? Because I want to know: are you thinking 5 of these, 10 of these, 100 of these things? I mean,
well, of the if we have a look at that starter plant, which is 20,000 tons and $66 million US, we would have to build 75 of them, right, to handle the end of life waste from battery productions in Europe in 2030. Right. You'd need to have 75 of these. So obviously you're not going to have 75. If you have to scale them up by a factor of 10, you would need 7.5 200,000 ton plants. Right. So that's where we're looking at getting in early. We invested in this. We've got quite a lot of cash. We've got more than $100 million in cash and investments, no debt. So, we are in the position where once we get the commercial supply contract, we can absolutely make an investment decision without any requirement for equity or debt funding.
Right. And once you've done that and that plant is up and running, presumably, if you do build more, you're going to go and raise debt for that rather than burn into your cash that you've got today.
Well, you're going to have significant cash flow from the original 20,000 ton plant. Exactly. So I would imagine, so 2019's been the pilot at a high level. 2020 is a demonstration plant, the class 3 engineering study. Look to make an FID, subject to getting obviously a commercial supply contract at the end of 20. Build the plant in 21. Now, bearing in mind, we already own the front end of the plant. We've got a full scale 2 tons an hour shredding circuit that's currently being turned from North American electrical specs to be EU compliant. It'll then get shipped in the first quarter next year over to Germany via Hamburg down to SMS near Dusseldorf. That'll be set up. That can operate at a 20,000 ton per annum feed rate. So we're going to have a demonstration plant, but when we go into production, we'll only have to build the back part of the plant, the hydromet plant. Right. So 21 in terms of building it and commissioning it, and production in 22. At the end of 22, we will have to then focus on building the plant that'll be most likely 10 times bigger.
Wow.
Now, in the interim, we'll be looking to North America to see if we can deploy a similar hub and spoke on a continental basis there. So we're in discussions with parties there. So, we, in terms of the responsibilities, Neometals will, and given that we've been in lithium for 10 years, we've got good contacts with the lithium supply chain. We will be concentrating on commercial agreements to feed the plant. We'll also be responsible for off-taking and marketing the off-take of the products out the back end of the plant. And the gentlemen at SMS will be, the heavy movers in terms of building the plants, operating the plants, and ensuring that they, do what they're supposed to. And the added benefit is that SMS is the largest generator of German import-export financing, which is,
Okay, I hadn't picked that one up. Okay, interesting.
Yeah.
And just one question which was sent in to us, which was the process is proprietary to you. It's your flow sheet.
Correct.
But none of the components themselves are proprietary. They've been, it's a well-trodden, well-used process, in terms of the machinery, the shredding, the
Yeah, correct.
So you're not reinventing the wheel.
In terms of there's no proprietary equipment, so to speak. We are able to procure from numerous vendors everything that we need to make sure that our process works.
Okay. Look, Thank you very much for that. I understand that better because you've not gone into that much detail previously. So thank you for that. I think people can extrapolate what they want to extrapolate from that in terms of numbers and scale of the opportunity here. There's lots of moving parts. I appreciate you've got to do things in a certain way. I think people will be excited to get some guidance from you next year when you start firming up on things like the SMS JV and timings.
Absolutely. I mean, you've got in the first quarter next year for the battery recycling project, you've got pilot plant results, the joint venture with SMS, which will trigger a movement to the demonstration plant construction and commencement of the Class 3 engineering cost study. So, all guns blazing in the first quarter.
Beautiful.
And then, what you'll see is then we'll follow with commissioning the front end of the plant, the demo plant, commissioning the back end of the demo plant, the Class 3 results, and in the background we'll have our commercial boys in planes shaking a lot of hands and trying to get some ink on paper for the supply.
Beautiful. Okay. Beautiful. Now, if you don't mind, can we just talk quickly about the nickel project? Because again, you announced about a month ago some quite good grades, which is a good start. Can you give us a sort of sense of the scale of that project? I know this is slightly behind the battery recycling project in terms of priorities, but not far behind.
Yeah, look, absolutely. I mean, when we have a look at the massive explosion in terms of lithium battery production, so not only Europe, but we look on a world scale, we're moving from somewhere in terms of, sub 300 gigawatt hours globally at the moment to about 2.2 terawatt hours by 2025. Wow. Right? So you're looking at a 6-fold expansion of the raw material requirement. So in terms of what commodities are impacted the most, you've got graphite, because the anode's 50% of the volume, not the value in terms of the battery. We're not in graphite. It's dominated by the Chinese. The other resources in Africa, I don't have a tolerance to compete with either of those. Lithium, which we're obviously very, very familiar with. Nickel, because the batteries for the cars are becoming more nickeliferous, and cobalt. So, nickel is a particularly relevant material. They use nickel sulfate in the batteries. Therefore, nickel sulfide deposits will be at a premium in a couple of years. I appreciate nickel has gone up and it's gone down and it's a little soft, but I think in a couple of years we're going to see a materially different nickel market, especially for nickel sulfate going forward. So we acquired the Mount Edwards nickel project in early 2018. 4 historic mines, 10 historic resources there, all nickel sulfide deposits, 240 square kilometres. It was the biggest production base outside of Kambalda. So Kambalda was obviously Western Mining's original nickel boom area. It's a fantastically well mineralised area. No exploration for 10 years because the nickel price was pretty average and it was held privately. We bought it off a private group. And so what we've now done is acquired it. We're going through those 10 resources, validating them, bringing them up to the latest JORC standard. And we've gone from like sub 50, we're now at 130,000 nickel metal tons contained. More importantly, what we're going to try to do is actually look at the more higher grade massive. There's about 7.7 million tons of resource at 1.7% nickel. So that's massive, matrix and disseminated. We're going to concentrate more on the massive and matrix. And we've been having fantastic results. The exploration methods in the last 10 years have got much better, and you can discriminate, ground and soil anomalies much better. And we're having fantastic success with the drill rig. And so, we're going to be improving both the volume and the quality and the grade of the mineralization. That's our aim. Ultimately, we may look to return that back to the shareholders. We haven't made up our mind in terms of how we're going to realize value. I mean, one of the ways we approach the business, and we try to identify the thematics we want to be exposed in. That then tells you what commodities you want exposure to. That'll then tell you what type you should be getting exposed to. Then that'll tell you what projects you should look to get. And then we, put it into our ecosystem. We've got geologists, we've got metallurgists, we've got mining engineers, we've got process techs. Build up that value proposition and then bring in partners to accelerate the development. Fortunately, with Mount Edwards, it's only 60 kilometres from Australia's largest nickel concentrator, which is currently on care and maintenance, which is linked by rail to a nickel smelter and a nickel refinery. So, we're in a fantastic spot. We're still in the building value, but we've always got an eye on how we're going to return that value back to the shareholders.
Beautiful. I think you're right. The nickel thematic right now is very, very exciting. We've interviewed a lot of nickel companies in the past few months, and the forecast suggests that the price will recover to mid next year. Okay. So,
look, we're with all of the projects, we're looking at what's happening in a couple of years' time. We're fortunate that we've done. Generally, it takes 7 years to develop these things. About Marion, it took us that long.
Yeah.
And so the hard work's done. You're now in the stage where you're doing the pilot and the final studies, and the Barrambie titanium vanadium project, the nickel exploration, the lithium hydroxide, the zeolite. You're in that building. You're in the advanced stages of building value, which I enjoy the most. But the other half of the business is you've got to have those strategies, and that you've got to attract the partners and capture value at the right time, which sometimes miners haven't done well. Buying assets at the top of markets, not getting out before they turn, that sort of stuff. So I followed JP Morgan's rule of investing. Get out early, get out often.
Yeah. Well, you're certainly building up a portfolio of projects which you're developing, and I can sort of see a timeline building up here. I like this ecosystem story that you tell about creating value through taking very sort of technical projects and commercializing them. It makes sense to me when you describe that. May I ask one last question on the nickel project, though?
Sure.
With regards to the grades are good, and you talk about 130,000 contained nickel sulfide, but how long will it take to kind of understand the scale of what you've got there is? Because I think anything below 0.5% would be considered low grade. Anything above that is very good. You're at 1.7, fantastic. But you also need scale. So how long does that process take?
You need scale if you're going to build a mill. So where the big capex for these mines is generally not in the mining side. It's in what do you need to build to monetize it. So there was never a processing plant at Widgiemooltha. Western Mining mined it, and they transported the ore, sometimes on rail, sometimes on road to a concentrator, and they processed it there. So if you take away what it costs you to build your own, you take away this critical mass. So we could start up at 200,000 tonnes of feed, 400,000 tonnes of feed. It's that's the sort of rule. Like if you're starting a gold mine, you've got to build a plant, and there's some hurdle. It used to be 50,000, but now the bankers say it's 100,000 ounces to justify the capital investment. You got to be producing blah blah blah, and then all of a sudden the boys with the spreadsheet are driving your mine plans. So what you can do here is you can take that big resource and say, okay, some are open pit, some are underground, some are higher grade, some are lower grade. At certain pricing scenarios, we should develop these resources in different orders.
Got it.
Why don't we find out? So what we've got there, let's get that into the best quality, able to then go over to the mine planners to do formal designs. We've got 11 deposits. There's a sequence from 1 to 11 that these things will come in. Some will make the grade, some won't make the grade. We've got 50 odd targets, and we're having, we believe we'll have good success with that because of the quality of the work that's been done. And so, you know, we will have the luxury of not having to worry about feeding a plant. You know, having to feed plants, you know, you need to have it at this rate. Well, sometimes the mine doesn't want to give it to you at that rate. And if you make me feed it, I'm not sure how much payable material it'll have. So, you know, we don't have a gun against our head to actually build a plant. We can mine what we like and process what we like at the right time. And like I say, if you double the nickel price, you mine much more than you do at the current price. Now, I've seen the nickel price in the last nickel boom at 50,000 US a ton. 50,000 US a ton is going to be about 75,000 Australian. At 75,000 Australian a ton of nickel, the whole lot goes. Right? So you've just got to work out and scenario model what these things look. I don't want to mine it now. Right? I just want to add value. And then, you know, go through the disciplined evaluation. You know, we've been underground miners, open pit. You know, we've got more right than we've got wrong, but we have had them go wrong before. So we know where the pitfalls are. If you don't have a mill and you can mine it to what, you know, the scenario that you want to, either the spot price or hedging forward or whatever, you don't have to worry about milling.
Chris, thank you very much for today. You know, I have no doubt you've done it with Mount Marion in terms of monetizing it for shareholders and paying dividends to them. I like what I'm hearing with regards to the battery recycling component. I'm very excited about what you're going to tell us next year. And of course, with this nickel, again, I trust you will make the right decision for shareholders as usual. Appreciate it.
Very welcome. Merry Christmas, Matt, and to all the viewers. Thank you.